Jagan for a bit now. Do you agree that the record is in itself dubious? Everyone agrees there. Also, do you think that, would you say, because S&P says it expects the government fiscal deficit to be higher than the government's budgeted estimate, which is 6% of GDP for the financial year ending March. Deficit outlook, according to S&P right now, governed by lower than expected tax receipts, also higher than budgeted subsidies, also weaker growth. First question to you, dubious record, do you agree? Also, would you say that because they've said fisc will touch 6%, do you think it'll go that high?
I think they don't have a great track record for sure, both in calling the positive side as well as negative side. And one more thing is today's market reaction itself has shown market's view about the S&P's downgrade. I mean, the market has immediately bounced back because the market has way of reacting to the things. And then I think to the extent of what the government can do, they have done. They have put their own government at risk in the process, and I don't think they can expect more than this. On top of that, as far as implementation is concerned, these are things which will take implementation, like 6 months. How can they expect, because the original rating came in June, July, and it's just a matter of 2 months. How can they expect that reform should be taken as well as implemented within a matter of 2-3 months? That won't happen any which way. I think yesterday he was while he was speaking, the S&P the spokesperson himself is in a double mind. He is unable to take a stand whether what is he talking about. All in all, I think market is not taking it very seriously, and if the government can able to implement the already taken decisions, and if it can take the new decisions, I think S&P.
You have a point. The S&P rep came on television and he said, oh, this is not a downgrade, we're just looking at future prospects and whatnot. We'll talk about the markets in a bit. I want to come back to you for the markets.
Yeah, I mean, stock markets are a strange beast. I think one should know how they function. But having said that, in a game where 2 lakh crores of trading happens in a day, I think you can't take it lightly. It will have systemic implications. And moreover, the money that comes is about, already this year we already got $16 billion. That will impact rupee. Because why we have to take stock market seriously is because it will have implications. That same rupee you are buying the oil, because oil imports is a huge major bill. What I'm trying to say is that stock market is part and parcel of the economy, so we have to see it in the context. It has a nature of being volatile and strange business. That doesn't mean we should completely forgotten it.
I'm not saying that, I'm talking about an obsession, only with that.
No, I'm saying obsession is not needed, but that's very much integral part of the economy.
True. Let me put very, very quickly another question to you before I go to Rajesh Mahapatra. Markets were rattled yesterday. First the IMF report came in, then this particular S&P report came in. The Sensex dropped by 162 points. Currency and bond markets also kind of wilted under pressure. The rupee fell below the $53 mark against the dollar. It created some anxiety in investors, even as bankers and economists. They seem to be saying that, look, our finance minister says that shed all doubt and our economy is on the track to higher growth as well. Now these S&P and other rating agencies are saying this is not going to happen. How seriously is industry and the markets taking this? Also, this is surely something the market doesn't want to hear right now.
One thing is the market has rallied a lot in the anticipation, and that's so some profit booking is just a matter of the time. I think these reports have just become the triggers, not necessarily the reasons. I think once that wave is completed, today again the market has bounced back. What it shows is that market is saying, just come on. I mean, we don't take you seriously. I think that itself is a sufficient message to the S&P. And moreover, if the government takes reforms here and the rupee it comes below 50 rupees, and there is absolutely no reason why India should become the again the hard darling of the global money, because we have to remember the growth is not there anywhere, and we are acting very aggressively with the reforms. Perfect combination and cocktail of global liquidity and Indian reforms. Excellent cocktail for India to take advantage to reach its deserving position.
So you're saying we are poised to do well right now. I want to go to Rajesh Mahapatra right now. The finance minister Rajesh has categorically come out and said, he's mentioned that there is no fear in his Chidambaram-led North Block of a ratings downgrade. Very quickly, Jagannathan, insurance and pension sector, like he said, most probably if Parliament meets and sits, this will get passed. Do you think, how positive do you think that's going to be for at least these reports that we are supposed to be junking?
By clearing in cabinet, I think government has sent very strong signal that they mean business. At least they have cleared at that level. I think the sending a message to S&P, actually we have done our bit. And secondly, on top of that, already the rupee has strengthened from 55 to 52, helping the oil subsidy, oil import bill. So already the purpose that is supposed to achieve, that was eliminated. Even in December, if in the winter session, if it doesn't get cleared, for 3 months already we have taken the advantage of 52 rupees per dollar. So I think the half job is already done. I think if the parliament functions, yes. If not, it will not get cleared, but the world doesn't end there.
Right. One quick last word from Rajesh Mahapatra. We are completely out of time, Rajesh. Your last take on this ratings, the ratings game also. Is North Block doing enough to get growth back on track? Like you said, domestic growth is the key, but reform, second wave of reform, should we expect that?
We haven't seen it. I think the measures that we hope should come, or we expect that should come, to recreate the resilience that I spoke about, which will be key to sort of getting India back its place on the global high table. We don't see that coming. I mean, we don't see that to have happened so far. So that's the thing now one would need to talk about. Just to reiterate, S&P, Fitch, Moody's, they have a job to do. Let them do their job. We have a job to do, which is very different. And the finance ministry, policymakers, leaders in this country should be focusing on that.
Absolutely.
How to make growth inclusive and how to revive domestic consumption, domestic investment.
Absolutely. Rajesh, I think you've hit the nail bang on the head. I must thank all my guests before I sign off. Dr. Santosh Mehrotra, thank you so much for joining us. Rajesh Mahapatra, Mohan Guruswamy, as well as Jagannadh Thunuguntla. Of course, Moody's, Fitch, S&P, whatever you have, they have a job to do, like Rajesh said. But of course, the finance ministry shouldn't be really concerned about it. We shouldn't be concerned about what some rating agencies think about our growth prospects. Domestic growth, domestic drivers, like my guest mentioned, are the key. And like Mohan Guruswamy mentioned, of course, we should try and tap into the $79 trillion pension fund that is globally. Even if you get a fraction of that, we will be in a much better position. That's all the time we have on The Big Picture tonight. Athar Khan saying goodbye, good night, and thank you for watching.